Welcome, welcome. My name is Sulema, and if you are new here, like, comment, or subscribe so we can stay connected. The topic of today is sales tax. Disclaimer: this video is based on my own experience as an accountant. Sales tax, like any other sales tax, are subject to change, so what's true today might not be true tomorrow. So always check your state-specific Department of Revenue or Department of Taxation for most updated information. We will be covering what sales tax is, how they work, and what is their purpose, and as well as a little demonstration on how to set them up in QuickBooks in case you use QuickBooks for your business. What is sales tax? Sales tax is a government-imposed tax on the sale of goods, and in some states, certain services are taxed. It's generally a percentage of the sales price that a business is required to collect from the customer at the point of sale. For example, if you sell a product that is $20 and the sales tax in your state is $10, you will be multiplying $20 times 10% is $2. So the receipt would look like $20 for your product, $2 for sales tax. The total to collect from the customer is $22. How does sales tax work? Sales tax has a 3-step cycle. The first one is collection, the second one is holding, the third one is remittance. Collection. The business collects the sales tax at the point of sale. Second, holding. Once you have collected the sales tax from your customer, you need to hold this amount in a separate bucket than your revenue. Super important. This is not income, so don't code it into the P&L. This will need to go into an account in the balance sheet as sales tax payable. Third one, remittance. The business has to report and pay the sales tax collected to the appropriate state or local tax agency. Depending on your state's sales tax policies, you'll need to file and pay sales tax on a monthly, quarterly, or annually basis. Filing and paying taxes go hand in hand. So if you have to file monthly, you need to pay monthly. If you need to file quarterly, you need to pay quarterly. For example, in Arizona, I live in Arizona, remittance depends on volume yearly. If my business has collected anywhere between $0 to $2,000, and that's approximately mainly for the entire year, I'll have to file and pay annually. If my business has collected sales tax for more than anywhere between $2,000 and $8,000, I need to file and pay quarterly. If it has been more than $8,000, I need to file and pay monthly. Important note again, the sales tax does not belong to the business. You're just acting as the middleman to collect in behalf of the state. And you need to stay on top of this because if you don't collect sales tax, it's gonna have to come out of your pocket. You're gonna have to pay regardless if you collect from the customer or not, because you need to pay for the products or sometimes services that you are providing. What is the purpose of sales tax? The purpose of sales tax is to generate revenue for local and state government. These funds usually go to roads, infrastructures, public safety, schools and education, and other community services. It's a way for the state to ensure the revenue is collected from consumer spending to support public needs. Now, let's go to QuickBooks. Perfect, so we are in QuickBooks. So this would be your home dashboard. It'll look very similar, if not the same. From here, we're gonna go to Sales, scroll down, Sales Tax, and then Overview, and you're gonna hit Get Started. If you have not set up your business address in QuickBooks, I'll recommend doing that because it will sync here automatically. So let me just go back here super quick. You'll go to Settings, and then Account and Settings, and then here's where you would add your address, your business address, of course. especially if that's your location too. And from here, once you edit and add it, it will sync back to this portal here. This is a sample company. I am not putting my information here because right now I'm residential, so I have my residential address for my business. So this is just to give you an example. From here, I'm gonna hit next. Since the address is fake, it's pulling weird locations here, but I've done it for clients previously and it pulls the right information when you're setting sales taxes. So from here, California is just the California Department of Tax Fee Administration. And then for Arizona, I know it's just Arizona. And then you can always, so for example, here for Tucson, you can look and see if there's any local taxes. If it goes into the local level, for the local level, I guess. But it's not, so I'm just gonna do Arizona Department of Revenue. Then from here, I'm gonna hit next. Right here is where you can change the percentages if QuickBooks did not pull the right percentage. And for that, always check your Department of Revenue or Department of Taxation for the most current and accurate information. And I'm gonna hit from here, save. And then continue. Result Tax Center. Here, it will ask you for the frequency that you need to report to this agency. If you're just starting your business, I would just do annually because you don't know the volume that you're going to be collecting for sales tax. And then as you move on and you start, seeing the trends and everything, you can adjust the frequency. And of course, always check your designated Department of Revenue, because it might not depend on volume, and you just need to submit and to pay and file taxes on a quarterly, annually basis, whatever the case may be. And then you are all good to go, all set up here for sales tax. This is great because it will send you reminders too. Once you're approaching the deadline, it would ping you and say, hey, you need to file, you need to pay sales taxes, or sales tax is coming up. Another advantage of having sales tax set up in QuickBooks is that as you are creating sales receipts or invoices, it will automatically, when you are collecting the money, right, it would put the portion to the sales tax payable account on your balance sheet and not bring it into your P&L as revenue. And of course, this also ties to the chart, structuring your chart of accounts. So I'll do another video on how to do that to make sure you are coding these two things separately. Important note, if you are selling outside of the state, either via online or shipping orders out, check the economic nexuses of those states that you're selling to, because you might be required to file or pay taxes based on the state's threshold. If you have locations in different states, and that could be either a business location, a warehouse, or an online store registered in a different state, check the physical nexuses of those states, because you might be required to pay and file taxes. Pro tip, and this is based on my own experience, if you are selling to multiple states, explore the option of having an online store like Shopify or WooCommerce and a tax platform like TaxJar. TaxJar tracks the changes in sales tax, and Shopify is the collector when you sell the product. These two have a successful connection, so TaxJar being the tracker of accurate taxes and Shopify being the collector, at the end of the month, you can compare the two platforms and assess if you have been collecting the correct sales tax percentages. If you've been over collecting taxes, you'll need to refund your customers. If you've been under collecting, you'll need to pay out of pocket. I hope you have found this video informative and helpful. See you next time.